Infrastructure development plays a major role in promoting growth and reducing poverty. In Africa, however, underdeveloped infrastructure continues to be a binding constraint to sustainable development. Yearly estimates of Africa's financing requirements range from $130 billion to $170 billion, with energy infrastructure seeming the most in need of financing on the continent, followed by water and sanitation and transport infrastructure, tailing closely in funding needs. In Nigeria, infrastructure currently valued at about 35% of the nation's GDP is widely regarded as dilapidated and inadequate. By comparison, larger and much more developed economies typically have an infrastructure base sitting closer to about 70% of their GDP, representing a huge funding deficit for Africa's largest country in capital projects. The Nigeria Infrastructure Debt Fund has been at the forefront of efforts to close the funding gaps that exist in the market. And joining me to discuss the reality and implications of financing infrastructure and the fund's work is Bolaji Balogun, Chief Executive Officer at Chapel Hill Denman, a leading independent investment banking, trading and investment management firm. He is also the Chief Investment Officer at the Nigeria Infrastructure Debt Fund. Thank you so much for joining us today, Mr. Balogun.
Thank you very much.
Good to see you.
The
first question I have is really around what the actual funding gap is. We have these figures being thrown around all the time. What is the reality of that gap?
So my sense is those figures really represent a baseline. As with most things around African infrastructure, the reality is that until you build it, you'll never know. So when we planned mobile networks in this country 20 odd years ago, most of the business plans, and I was involved actively with writing one, estimated that the market would be 35 million subscribers at peak, and the largest mobile operators here would have 10 million subscribers. 20 years later, 21 years later, we're sitting at 200 million mobile subscribers. So my sense is that those 100 billion numbers, of which Nigeria's own portion is approximately $40 billion,
Wow.
Really underestimate the real demand.
Yeah, interesting. And NDIF, the Nigeria Debt Infrastructure Fund, for which your CIO has been around for a while, what do you think the impact of private sources of financing has been on the infrastructure landscape?
So once you understand the government's finances, you're going to understand that the government has no ability whatsoever to finance infrastructure in a significant way. If you put $100 through the government, 76 of it will get spent on salaries and debt service. Of the 24 that's available for capital projects, probably 18, 19 is going into buying Land Cruisers and all of the other elements of government's own working infrastructure. So the money that's actually available for development infrastructure is $5 to $6. So whether you like it or not, private capital will be the future of financing infrastructure on this continent. And most of that private capital will need to come through asset management structures, because if you put 100 through an asset manager, 98 or 98.5% will go straight, to the requirement. And that's why these models are going to be in the long term much more sustainable for financing.
And there's been a huge explosion of these funds, but what would be really good to understand is what sort of projects are getting the funding from the private capital?
So a variety of things. Whether you like it or not, we've got to do physical infrastructure here. So we're doing things from power to digital infrastructure. I'm really proud about some of the work we've done around renewable infrastructure. One of the projects that we like to tell a story about is financing a company called Haven Hill. Haven Hill has brought solar power to 110,000 individuals living in villages between Oyo and Kwara State, never had access to electricity before. It's easy to provide financing to companies, like Daystar and Starsight, who we've also been involved with financing bank branches. But it's a lot harder to finance a company that's taken solar power to the bottom of the pyramid.
The last mile.
And for me, that's one of the most exciting projects we've done. It's replicable, it's scalable, but we're also financing social infrastructure. So we're financing student accommodation, we're financing healthcare infrastructure. the opportunity is really endless.
Yeah, and you know, for those who are really interested in this space, you know, is it a case of just the pure vanilla structures? Or are you seeing more innovative types of financing emerge in this market?
A lot of the work will be driven by innovation. So first and foremost, in a poor country, blended finance is absolutely important.
And blended finance being?
And blended finance is really the correlation between private capital, institutional capital, and philanthropic capital. And whether you like it or not, that's going to be really, really necessary. Financing in local currency is non-negotiable. If you look at the 40-odd countries that have industrialized since the end of the Second World War, there is one simple correlation that you'll find across all of them. Most of that investment in infrastructure has come in a rapid, sustained way, driven by private capital, predominantly in local currency. And it's really important to study history because, you know, if nothing else, you know, history rhymes, yeah? And there is a reason that these countries have succeeded. You cannot finance infrastructure for poor people in foreign currency.
Yeah.
All you do is you impoverish them, you know, further. There are a couple of elements of infrastructure like airports, like seaports, which generate dollars, but by and large, most people pay, you know, for their phone, they pay for their power in Naira. And you've got to ensure that you're aligned from a financing perspective in that sense. I'll also touch on the important role that green finance, that non-interest finance can play in infrastructure. And in order for us to succeed, a lot of this innovation is going to be absolutely critical to the mix.
Absolutely. And, you know, I always say I have my triple drivers for infrastructure finance. I say low cost, long-term, local currency. And
Absolutely.
I wonder how well we're doing that. So climate has become quite a big thing. You saw earlier we were discussing the floods in Nigeria. So climate-focused investment and finance is becoming big. How big is that market now in Nigeria?
It's going to be, over the next 30 years, to my mind, the most substantial piece of infrastructure financing. Whether we like it or not, the whole world is focused on how we rapidly move towards net zero. And all countries in the world have signed up to a variety of obligations around reducing carbon emissions. It's really important to understand, however, how every country, ahead of countries like Nigeria, have developed. If you understand the scale of Nigeria, which will be 400 million people, which is coming from a low infrastructure, low industrialization base, low agriculture base in 2022, the journey it needs to travel by 2060, if it travels it the way the rest of the world has done, the carbon emissions that we will produce here alone will be destructive to the rest of the world. So for our own children, for children all over the world, countries like Nigeria will need to be very, very focused on how we make that journey. Almost certainly we cannot do it as a net zero, journey as the rest of the world is professing. Our energy transition plan suggests a much more just way of making that transition. But one thing that the rest of the world isn't focused on is that countries like Nigeria cannot do it on their own.
Yeah.
And that's one thing for me that's perhaps the only weakness of an excellent energy transition plan. It's really not focusing the attention on the fact that to deliver those objectives, there will have to be a significant external, intervention to be able to enable Nigeria deliver on that.
Yeah, and very fascinating points, especially around climate financing. COP27 is coming up in Egypt, I think, next week. And, everybody's talking about the global capital commitments to the global south. But this private sector financing, I have a question for you before we go on a short break, is most of it coming locally, or do we need to also rely on international capital flows?
Without doubt, you will need to rely on international capital flows. But first and foremost, I think Nigeria is in a very unique place where, unfortunately, it's, it's lost its gravitas with international investment capital. So we are going to have to recognize, that capital, as I heard somebody say yesterday, behaves like a woman. It needs to be nurtured, it needs to be invested in, it needs to be attracted, right? And it has a lot of options as to where it can go. And we have to recognize that we cannot develop Nigeria's infrastructure on our own. So we are going to have to build a market that's much more predictable. Firstly, in the way that capital enters and exits. Secondly, around our monetary policy regime. Thirdly, around fiscal discipline, and around, just certainty, transparency, predictability in everything that we do. But local currency will play a dominant role. We have an excellent opportunity with a pension industry, which, has been born out of one of the best pieces of legislation we ever wrote in this country. We now need to recognize the importance of focusing that pension industry on financing Nigeria's development. But if we do our own bit, then almost certainly international capital will come. One of the things that I'm excited about is we've been able to build a very, very large asset manager here, to a large extent predominantly based on domestic capital. That's not common anywhere on this continent. That's not common, anywhere outside of large, emerging markets or large, developed economies. And I think when you do that, then you then build the credibility that enables international capital come and support what you build.
Yeah, so the NDIF, which is your debt infrastructure fund, presumably has foreign investors also as part of that fund.
So it's quite interesting. Up to date, it has 24 of Nigeria's 26 pension funds. There are 2 that aren't invested because one of them we own.
Yeah.
The second one is chaired, unfortunately for me, by my younger brother. So they're not allowed to invest with us. It's got the Sovereign Wealth Fund. The only non-resident investor to date is the African Development Bank, and yet we've had a significant
and they're African.
Absolutely.
So actually it's really a domestic focused fund.
It's very, very
interesting. I really love that analogy you gave about the nature of capital investment, but we're going to go on a break now. So when we come back, we'll be talking and continuing the conversation with Mr. Bolaji Balogun around infrastructure financing in Nigeria and the wider continent. Stay with us. Well, you're watching Business Week here on Arise News. I've been chatting with Mr. Bolaji Balogun of Chapel Hill, Denman. Great to be chatting with you again, Mr. Balogun. So I want to ask about, if you're interested in investing in infrastructure, is it actually a viable asset class? What are the returns like?
Absolutely. So first and foremost, infrastructure we see as 3 asset classes rather than 1. There's infrastructure credit or debt. There's operating infrastructure equity. Those 2 are for, all types of investors. And then there's development equity, which is for much more sophisticated, specialized investors. Infrastructure well done actually is a very rewarding investment asset class. The NIDF, as an example, is Nigeria's best performing fund over the last 5 years. It's delivered over 200% total returns from the start. It's made 17 quarterly distributions. It's actually the only fund in Nigeria that distributes quarterly and has met that obligation regularly. Will announce another distribution for the last quarter imminently. And if you put 100 naira in at the beginning, you've gotten that 100 naira back in distributions and you're still invested in it.
And what I love about it is just the double bottom line impact of investing in infrastructure as a viable class, but also the impact.
And the impact is even much more significant. So we produce an annual impact report. We talk about the jobs we create directly and indirectly. We talk about reducing carbon emissions. We talk about opportunities created for women and youth. We talk about adding to infrastructure stock, and the impact is far more significant even than the economic returns.
Clearly a great success story. So I want to ask you a bit about policy and regulation. Are there certain regulatory initiatives that have been taken that excite you about unlocking private financing for infrastructure?
So to my mind, I'll say 2 things are exciting around the asset class. First and foremost, Nigeria's energy transition plan creates, really a vista of opportunities. And many of which we weren't thinking about in the market. I'm excited about the developments around Infracore, where we're one of the selected asset managers by the 3 sponsors. I think Infracore creates a new precedent for financing, infrastructure in local currency long term that is replicable across the market.
Yeah, fantastic. I know you're also very much a champion of entrepreneurship. I've seen you on the Lion's Den, and congrats on that.
Yep.
So people talk about SMEs being the driver of economic growth, but I also think infrastructure is a big driver. Is it either or?
No, they're not mutually exclusive. And in fact, without solving the infrastructure problem, it's really, really difficult for SMEs. It's really impossible for you to deliver good investment returns investing in the economy. Ordinarily, an investment that should deliver 2-3 times multiples only delivers 1x because of the amount that's going into infrastructure, whether providing your own power, providing your own water, or providing your own digital infrastructure.
Yeah, fantastic.
So solving infrastructure is a huge enabler for entrepreneurial activity.
And if you were to sort of cast, look into your crystal ball for the years to come, what is the outlook for infrastructure development in Nigeria and broadly across the continent?
Very substantial. These are the largest infrastructure opportunities on a global scale. And a lot of investors will focus on these markets. But we will need to be recognizing of the fact that on our own we cannot do it alone. And we have to create an environment that looks like, feels like, behaves like the rest of the world. And that's open to all layers of governance and leadership in this country, including both leadership in the public sector as well as in the private sector. But if we do that, we will deliver a Nigeria, which by 2060 will be one of the 10 largest economies globally, and will be, one of the best places to work. And young Nigerians don't have to get on a plane and go to Canada or the UK. The opportunities they're chasing there will be available to them here.
Yeah, thank you. And passing on a high note, hopefully. It's been great speaking to you, Mr. Bolaji Balogun of Chapel Hill.